Hello everyone, happy to meet you all once again in this market update video. This is Sriram here from wibe.school, and today we'll have a look at the general market update and my comments on the US market. And let's start with SPY, which is S&P 500. So here's the chart for S&P 500. Let me make it a simple line. So here's the thing, right? From 2020 crash, that's somewhere around 336, the all-time high before the 2020 crash. It went up and then there's a huge rally. It's just a fantastic rally. In fact, most people would have doubled their money just by investing in S&P 500. And after that, recently we have seen a significant correction, which is probably somewhere in the range of 10% from its all-time high value from here to here. That's somewhere around 8% as of today. And my thinking is it's likely to continue a little bit downward, right? So the nearest support is somewhere around here. That's 432 level. We are exactly at 437. So you could see that whether the stocks could bounce from 433 or 434. Around 430s level. Let's watch out here. If that breaks, it could go as low as 425 in that region. So nobody knows. So as of now, I think more downtrend is expected. And let's look at 200-day moving average. So that's the red line is the 200-day moving average, which is a key indicator in terms of, most traders look at stock selection based on this 200-day moving average. And if you see, SPY has slightly breached below the 200-day moving average. So that's here. Let's shift it back to the line chart. Now, this is the key indicator, that is S&P 500. Let's look at another analysis. So it has been trading within the channel in an uptrend. That's a fantastic rally, and as you can see, the nearest support, as I said, it's exactly at 437 somewhere here, and then you could have plus or minus 2% or something as a buffer. It doesn't bounce exactly on the line, and then if it breaches this point, it could go to somewhere between 430 and 420 levels. So this, I'm looking at this as a key support region, a minor support, I would say. If it breaches beyond this, then I think the next would be somewhere here. These are all minor supports, nothing major. And the next major support was somewhere around 361, but I don't think with the current markets it will go that long. I think it'll probably hit bounce back or hit bounce back from here. That's my thinking. I may be wrong. And that's the chart for S&P 500. And if you look at the key moving averages, let's say that's 100-day moving average. The brown color is the 100-day moving average, and the red one is 200-day. If you carefully observe, S&P 500 has bounced 100-day moving average twice, thrice, and then four. And then the fifth time, I was expecting it'll bounce back, but then it breached that, and then it went all the way down to 200-day moving average. In fact, I would say after the 2020 March market crash, this is the first time, this one is exactly somewhere both 100 and 200, but then this is the first time SPY or S&P 500 touches or tests the 200-day EMA, 200 moving average. So it's a key support. Usually 200-day moving average is a key support, and I'm expecting it should bounce back. If not, it could probably go to the next support levels here, and then it'll bounce back. If not, it could find another support here, and then it can continue. And then there's a major support here at 360 region, and then the pre-pandemic levels here. I don't think it'll go to that level, but I may be wrong. So that's the update on SPY. Let's look at QQQ, the Qs, that is NASDAQ 100. And if you carefully observe NASDAQ 100, it posts a similar picture. The the NASDAQ 100 index has tested 100-day moving average several times. However, this is the first time it is touching the 200-day moving average, and it has breached below that. Let's observe this carefully. It has gone well below the 200-day moving average. I think the selling pressure was intense and it is likely to continue. At least it finds the next support somewhere here. You can see that here. I think this could be, let's shift it back to line. That makes life simple. And let's remove 100-day, let's remove the 100-day because it's of not much of significance. Now let's look at the key support here, right? This looks like a support. It should bounce back. If not, it could probably go to probably a little bit. I'll increase the thickness. Yeah. If not at this levels, it could go to these range, that is somewhere in between 335 to 340 range. That's the key support I'm looking at. And I mean, the tech stocks have been under significant sell-off, and if you carefully see from all-time high of 403, it has dropped by 12%. That's significant, right? So probably if you're a long-term investor, this is the right point to start, loading up your bullets. So I would say think it as a revolver. You have 6 bullets, right? Probably you can consider splitting your funds. You have $1,000. What you can do is divide by 3. You can load up 300, and then if you see more correction, enter 300, and then 300. Keep adding it up. So that's how you can play with this if you're a long-term investor, and that's with QQQ. Let's look at QQQ, the trends here. It's also posting the similar picture here, and let me look at Dow, the Dow Jones Industrial Average. So the Dow Jones Industrial Average, let's look at the 100 EMA. So it's always have tested exactly at after the COVID crash, once at 200-day moving average, twice, and then thrice. It has also breached the 200-day moving average. So I think probably the next week, early next week, there could be some sell-off, and probably later part of next week, the market should find some kind of support unless something changes dramatically. And that's the update I have. And more importantly, other updates from the markets are Netflix. I'm sure everybody are aware of what's happening to the Netflix. So I mean, I've just drawn a parallel lines because it was ranging for some time, and I'll delete this one. And then if you carefully observe what has happened to Netflix, here it is. It has dropped massively over the last trading day because of the news that the subscription is likely to fall announced by the company. So from its all-time high, it has dropped by 42%. That's massive. That's really massive. And it's kind of not exactly at the support, but it's just hanging around. So probably don't just jump into and then invest in it. Watch out for a key support here at 382 levels, and then look for signs of reversal. So only when you get confirmation, don't buy on dips, rather buy on strengths. If the stock falls further, just wait. If it reverses, let's say it reaches some point here and then starts moving slightly upwards, once you get the confirmation, then you can load it up. Personally, to me, I think Netflix fundamentals are sound. It's just that subscribers growth is dropping, or the forecast is not that great, but that's okay. As long as people are hooked on to binge watching Netflix and other series, it should be okay. And let's look at Coinbase, because there's a massive sell-off happening in the crypto area as well. So as you can see, it's well below the IPO price now, Coinbase, right? Again, this is not a buy or sell recommendation, but just that is just massively at a cheaper price than what it was at an IPO. Let's look at here. It has dropped by 41% again. So from the IPO price of somewhere around $300, it's now trading around $190. That's massive. Like it's I don't know there's whether any support or resistance here, because it's well below the IPO price. So I think probably crypto selling also intensified. And then let's look at one more. The darling of COVID times now has been crushed completely. That's Peloton, right? If you look at Peloton Interactive, that's connected bikes and treadmills and all sorts of exercise equipments. It had a massive run up, and then now it's to the dust. So you can see that from all-time high price of $167, it's just $27 now. Personally, I'm not sure whether it can sustain any more new business opportunities unless they innovate their strategy or change the business model. That's 83% from their all-time high price. That's massive. That's really massive. So I think Peloton is definitely a falling knife. I'm not sure whether I'll be loading up. I'm not confident on the business model. But then if you can see the IPO or the price is somewhere around 25, and I see that support is somewhere around 20. Probably it might go slowly to 20 and then probably find uptrend. I'm not really confident on this business model because it's just that during COVID people have to exercise. They bought the connected treadmills and bikes and everything, but the future is a big question mark unless they change the business strategy. So that's 83%. So that's the update I wanted to share with you all regarding the US markets. And this week it has to be carefully watched down on the main index. Let's say SPY taking a support and then bouncing back, QQQs taking a support and bouncing back. We have to watch really careful and then position your trades accordingly. I suggest not to place any trades as of now until the market stabilizes, as the volatility is at all-time high. And at least for this year, let's look at the volatility as I'm talking about it. That's VIX. So if we look at the VIX here, you can see it's literally spiked up, right? So let me put the line chart. So that's whenever there is VIX shooting up to 25 and above to somewhere around 30 range, there's a real correction happening, right? So that's, according to me, that's every 3 to 6 months it keeps happening, right? So there's a cycle. So the moment VIX starts to drop, you can probably consider loading up the stocks and then ride. And then if you're a trader, when the VIX reaches a certain point, you can start selling it off. I mean, you should have a trade plan and then your own strategies rigged around, and then all these things have to be, the macroeconomics have to be considered before placing individual trades. All right, so hope you liked this video, and let's catch up again in the next video.